Hi, welcome to our latest podcast. I'm Francesca from SeavorChartered and I head up the payroll team. Today on our latest episode, we have Graeme, our director and client manager, and Liam, who's a chartered accountant. So today we will be discussing cash flow and the challenges that come alongside this, as well as tips and advice on how to manage your cash flow effectively. Just to start off, Liam, would you be able to give us a little update in general on business?
Yeah, business is good at the moment. Everyone's busy in the back of the office. A lot going on outside of the business as well, to be honest. Just been announced in the last couple of days about inflation going up from 3.4 to 3.6%, which is quite surprising, considering they're also contemplating next month dropping the interest rates down to 4%, which is quite unusual, to be honest. But also a big change, what's been announced as well and confirmed date, etc., is the introduction of the profit and loss accounts for micro entities and small companies from 1st of April 27, now getting introduced. But there is speculation at the moment about, especially off the business secretary speaking to Financial Times, that it might be getting a U-turn. So we'll just have to wait and see what's going on with that at the moment.
Yeah, I thought it was really interesting that literally we, as accountants, we've been knowing this has been coming for a long time. Companies House literally get to the point where they circulate it to all business owners. This is now coming in from April 27, and then literally within 24 hours, I'm reading a press release from a paper indicating that already they're considering a U-turn. Yeah. Like, in all honesty, it hasn't got lots of traction yet, but there's still plenty of time, isn't there, for traction to ramp up on that, and it might not happen. So we'll just have to wait and see.
Yeah, and obviously isn't the first time HMRC have done a U-turn, is it, that quickly?
24 hours as well. So
yeah.
Quite a long time for them.
So, right, well, we'll just get right into it. So if we could just go, like, why is cash flow important and the difference between the cash flow and a profit and how that affects a business?
Yeah. So I suppose from my perspective, it was just mentioning how important cash is within a business. There's statistics out there, I suppose, that businesses often, they don't fail because they're not profitable. They can fail simply because they just haven't got any cash. And I think there was a statistic that you mentioned, Liam, was it 82% of small businesses that fail, it's due to cash flow, not necessarily because they haven't got a good product, they haven't got a good service, or that they're not even profit. It could be that they're growing too fast and they run out of cash. So it's just so important that businesses are on top of managing the cash flow as well as the profit, because that's what ultimately can lead to them being successful.
Yeah, no, sounds good. I think what we'll discuss first is the common cash flow challenges that come with lack of cash flow and how that affects a business, if that's okay.
Yeah, I think one of the key ones out there is probably credit control, to be honest. Our clients on top of their credit control, because what I mean by that is, are they chasing the money in soon enough? Are their customers actually meeting payment terms? If not, should they be tightening it down on that? Just get that in, because at the end of the day, there's more and more businesses, if anything, going under with a lot of debt outstanding. And you don't want to really fall into that trap of being owed X amount at the end of it and realising, oh God, we're not going to get that in here.
I suppose as well, when it just feels a bit sticky at the minute with things, so that you've got to be aware of that. And it's a process start to finish, isn't it? It's almost literally from the second you agree to take on some work, what's those payment terms? Is the stage payments? Should you be paid goods on delivery, on completion, that sort of thing? And then once the invoice has been happened and the sales happened, it's a process right till the end. Like, what date does a statement go out? What day does a chaser go out? What date does a reminder go out? And then being consistent with it. Because if you're busy, you're doing lots of work, and then before you know it, a few customers, that could be a significant gap in your cash flow. So making sure there's some sort of system in there to manage it.
I think one of the most famous sayings as well, which we usually say around the office, is the person who shouts the loudest usually gets paid first.
Yeah. And that is true, isn't it? And when you're busy, you might not be focusing on that. I mean, other people are getting paid simply in prior to you just because you haven't chased it.
Yeah, it's like saying busier people aren't going to get paid as quickly because they're busier and then they're expanding, which then obviously leads to other challenges.
And we're not really keeping track of it either, of who's actually owes money in.
Yeah, no, that's fine. Obviously, I know we discussed on expanding quickly, but I thought another challenge would be like seasonal fluctuations. So obviously, some seasons will have higher trades in terms of construction. They might have a higher trade at summertime as opposed to winter, and that can obviously affect cash flow as well.
Yeah, I think it's something you've got to plan ahead for your cash flow. And certainly seasonal businesses can be most affected because they've got a plan for when they're quiet. They've got to make sufficient cash reserves while they are busy to trade through the quiet periods. Hospitality, I suppose, the clients we act for are mainly impacted by that, aren't they? And in that cash flow, I suppose they're planning for the ordinary ongoing costs, staff costs, things like that, factoring all the taxes into it as well. And it's making sure that they've got the right plans, right software, right tools, right systems to make sure that they're managing that and it's not overwhelming for them. Interestingly, I met a client actually earlier this week, and we were looking at how many times they make supplier payments, and literally every day of the month they're making supplier payments. I'm not going to say that's unusual or it's wrong or anything like that, but that means you're having to plan for payments 31 times a month. Where imagine if you said, well, actually all supplier payments happen twice a month, middle of the month, end of the month. You're only thinking about it twice. And that is much easier to plan than it is making random payments every day.
Yeah, it's easier to plan, easier to manage as well.
Yeah.
Wouldn't it be? Yeah, no, it's fine. I know another challenge that could also would be holding too much stock. Would you be able to give us a roundup on why that's a challenge and what can be done about that?
Holding too much stock sometimes can be good, but the way to look at it, your cash is held in that stock. And if you can't get that stock out the door quick enough or a good enough time frame, that cash is stuck, really, and you can't bring anything in.
Yeah. So, for example, if you've got the team need paid on Friday, if you've got £100,000 in stock but no cash, you can't pay your staff. Are they going to come in next week, or is your business gone?
Yeah.
That's the sort of thing. Whereas, for example, if your stock holding was half, maybe you now can make those payments. So why that's so important, I suppose, is because a lot of suppliers, they offer like discounts, don't they, or rebates on meeting certain purchase requirements. And that's great because overall it makes the purchase cheaper, but they're incentivizing you to potentially buy more than you need to. So you've got to offset that. Yes, it might reduce the price slightly, but what's the cost of not having the money? Because if you have to go and finance it or get an overdraft, there's a cost to that as well. So, I suppose that's what to think about.
Yeah, there is different ways to minimise it, really, because obviously as the business owner, you would know the demand for that product, so then you know how much you actually need in. So it's more just making sure you're not really bringing in too much stock more stock than what you actually need.
That's planning as well, I suppose, isn't it? Yeah.
So coming with cash flow challenges just comes with a lot of planning is required and just being a bit careful, isn't it, really?
Yeah.
In terms of other ways to improve cash flows, do you have any tips and advice? Or
Yeah. So I suppose the main one, what Liam said before, from my point of view is, get your credit. So look at your sales, get your credit control process in order, but that's not from when the invoice is raised. It's from when you take on the order. For example, do you have a new customer checklist that you complete? Do you do a credit check on them? Do you use software to see what their financials look like? Have they paid all their suppliers on time or not? What's their financial position? That sort of thing. So right through to actually how you chase them and you get paid. And then I suppose if it comes to looking at purchases, you could map that out. You could use software to help you do that. And from my point of view, I'm thinking, don't be making payments every day. Look at your business, what could work. Generally, I recommend twice a month. Once a payment run at the end of the month and then one mid-month to capture anybody that you've missed or anybody that's crying out for payment in that period. But I do appreciate some businesses maybe wouldn't like that. But even once a week, surely it will be sufficient to pay suppliers once a week. And if you're doing that, you can plan that, can't you? You can plan that a lot easier than a lot of random payments.
Yeah, and obviously with some suppliers, they'll have a different payment terms and all that, but I think it's better to be in touch with them and try and negotiate different payment terms with them. At least then, if you are tight with cash, at least you are reaching out with them and trying to work with them, if anything.
Yeah, well, that's a good one there, actually, Liam, because I suppose when people come and they're negotiating with suppliers, they think it's all about price, but it's not just all about price, is it? It's about price, quality, delivery dates, and payment terms. If a customer's willing to give you extended payment terms, there's a value in that. So, you've just got to consider it as well.
Yeah, obviously with people being busy as well, like having them payment terms where you're only paying twice a month rather than every day, it's less of an admin task as well, isn't it?
Yeah, less of an admin task. And if you are producing forecasts or you're using software, that's so easier to manage, so much easier to manage, because then you're only concentrating on what cash do we need in to make that next run or what do we need over the next month? It's just so much easier to see and plan for from my perspective.
Yeah, I think using the software is probably the key point in that as well, because if you are on Xero, QuickBooks or something, there is the cash flow forecasting which you can use, and at least then you can use that to like somewhat predict what's going to be coming in and what's been going out in the next week, 2 weeks, months, whatever.
Yeah.
And I feel like there's always some hidden costs which you probably forget about.
Yeah.
But with them forecasting tools, it might prompt you to remember about them.
Yeah. I do know in Xero, there's a cash summary report, which is actually really good to view what cash moves through your business. And then also it'll indicate, they're not in my profit and loss. For example, hire purchase payments, loan payments. And all of a sudden it can help you realise, God, before I've even made a penny, this is what I've got to cover this month. A lot of people focus on the profit and loss and think, I'm making a fortune. But then if you factor all those finance, loan repayments in, hire purchase payments, actually out of that profit, that what might be left, it can be quite surprising compared to your expectations.
Yeah. I feel like when it comes to profit and loss as well, most business owners probably don't actually realise that doesn't show that true reflection of what cash is actually coming in, because they probably don't take into consideration debtors, payables, etc., which is actually not getting took into consideration in them figures.
Yeah.
So obviously, I'm just having to think in terms of if a business is struggling with cash flow, do you have any tips on introducing money to the business and the best way to go about it? Obviously, there is loads of ways to go about it, but what are the more advised ways?
Yeah. Well, my first thought is if a business is finding cash flow challenging, you've got to get to the root cause of it. And sometimes it could just be lack of profitability. And that's a thing in its own right. Focus on how you can make a business more profitable. But it could actually be that it's a profitable business and it's overtrading, for example. And we can't. And, the conversations like, are we right to take on those additional contracts, that additional business? Can we fund the growth? That's what overtrading is almost. So find out the root cause. And then once you've got the root cause and see, if we get an injection of cash, however we do that, the business is still going to be okay. Because there's no point adding money in just for it to get to go. That doesn't solve anything. No. And then there's plenty of solutions. I don't know do you want to go through a few solutions, see if I can add to it?
Yeah, there's obviously the classic financing options. So if you do have bad pays, you can always get invoice financing, etc. Obviously, there's always the interest rate on top of that. But if you're needing that money in sooner, you can. Bank overdrafts as well. There's quite a few at the moment. The banks did go through a stage of not issuing out as much.
Yeah, and the SIM getting back more popular.
Yeah, and they're starting to accept more applications for it. There obviously is the yearly arrangement fee for them, and they do seem quite substantial. So before even applying for them, I would consider, do I actually need this? Am I going to be dipping into my overdraft that much? Because some of them can be 500, $1,000, quite a lot of money, to be honest, if you're already worrying about cash flow as it is.
Yeah. And I know it's easy for me to say sometimes when it's not a business, but I always remember a client, he took an overdraft on, paid the 1,500 quid arrangement fee. And I was saying, look, based on your figures, based on what we project, you're not going to need that. They wanted that safety net. They didn't even go into their overdraft. No, they actually went nowhere near it. And in a way, it's like, I suppose, there was value in the 1,500 quid because it gave the reassurance to sleep at night that they would have enough cash. Mm-hmm. But actually with planning, we knew we wouldn't need it. And we could have actually just said, look, bank, will you give us overdraft if needed? And if they said yes, but it would take us a week to organise, we could have delayed that until if we needed it a week before we needed it. But, it is what it is. All I would say is, I know how often do you come across a business that's got an overdraft facility that they're paying for every year and they're literally never using their overdraft? So that's a bit of a waste of money if you're not going to, but then they might see it as opportunity cost. Something happens and they need it. I suppose as well, so we said invoice discounting there potentially, asset refinance, personal loans, bank loans, credit card financing. So that's where a credit card someone who collects your payments from customers, they give you money in advance and then they get that repaid through credit card receipts from your customers or card receipts from your customers going forward. What I would say about all these things, though, it's understanding the costs as well, because a lot of them, they have got a cost to them, can be more expensive than when you first look at it. It's just understanding that. So, some reputable businesses that lend things like Funding Circle, iWalker, they are what they are, but you've got to look at what's the cost of it, understand it. Some of them quote flat rate interest rates compared to APR interest rates, and that can manipulate whether you think it's expensive or cheap. So just almost get a really good understanding of how long is it going to take, how much money am I paying to lend it over that period, and then make your own mind up whether you think that's value for money or not.
I think that's why it's so important to be able to forecast as well, to be able to think, okay, how much money do I actually need here? How much finance do I need? Because
don't take more than you need
to. Because it does come at a cost, and you want to make sure you can actually afford that additional cost as well.
Yeah. And then sometimes, I'm saying there, don't take money. In other cases, I've said get as much as you can, because you can always pay that back. If you get so much, it might be harder then to get another tranche if you needed it. But again, it's always here. If I give that advice, I think we'd have always decided what the root cause was, and we think it's solvable. Like we could solve it. It's good, or it's already resolved. But now the cash flows took a hit.
Yeah. So obviously, as we said, that people with cash flow are quite probably prone to making rash decisions. It's just a case of taking a step back, having a think, having a discussion, and actually looking at it before you make that decision.
Just look at the bigger picture.
Like, we've had clients, haven't we, that have taken loans to pay the VAT liability, for example, and the people who are actually marketing it as VAT loans.
Yeah.
But if they're charging you extra 10% of the money they're lending you just for that 3-month period, that's quite a substantial cost over the year. If every VAT return you start taking a loan off that. Now, luckily, we don't have many clients that find themselves in that position, but those that do, generally, they haven't spoken to us before they would do that. Otherwise, we'd potentially discuss other potential available routes. But there are their options. Ultimately, if a business is struggling for cash, there are plenty of opportunities. If you speak to your accountant or a broker or something, potentially they can find the best, almost cost-effective method to fund the business going forward. And there's some short-term solutions and some longer-term solutions.
Because sometimes it can be a bit of a burden taking it on yourself. So at least talk to us about it and be able to point you in the right direction as well.
Yeah, that sounds good. I know we did touch on a little bit on using softwares. Are we able just to go into a little bit more on how to use a software in terms of cash flow and almost how regularly it should be updated, and what are the benefits of keeping a software updated?
Yeah.
When it comes to cash flow on the software, I would probably look at it on a weekly basis to start with until you get a good grasp of it and know whereabout you are. The only reason being is because you might be able to find that solution quicker. And then as soon as you find that quicker, you might be able to then drop off a little bit. But sometimes the softwares can predict stuff, but it does take some manual entry as well. Because, say, for example, it works it off the bills. No, for Zero, definitely. It just works off the bills. It doesn't take in consideration your monthly payments, what you might not get bills for.
I certainly don't think there's a perfect solution yet for managing businesses' cash flows. In all honesty, I think it's a huge gap in the market if someone can figure it out and get it done well. Because there's lots of solutions out there, but they require so much maintenance on behalf of the business owner. And that's a discussion sometimes I have with businesses. I really feel for businesses that have got tight cash flow, the amount of extra management they need to put into managing that cash flow, it takes it away from other areas of the business. So, for example, if you had a well-managed cash flow that took an efficient amount of time, that time that you're saving there could be spent on growing the business, other decisions, more enjoyable things. Whereas if your cash is really tight every day, you're having to focus on that cash management, or every week, it takes loads of time, doesn't it? And the softwares, they're never going to be perfect, especially if they're predicting, because they're just guessing based on historic stuff. And going forward, it isn't always based on what's previously happened.
Well,
so
this is a problem, especially when it's predicting that you're due some money in on this date, but that day comes and goes and you don't get that money in. It soon has a knock-on effect.
And you can have a sales contract with a customer that they're contracted to pay you so much by the end of this month. But guess what? If they decide not to pay you at the end of this month, you're not going to get it.
Yeah, and the forecast isn't going to show that.
The forecast isn't going to show that, is it? So all you can do is keep communicating with them and trying to manage that. And a forecast just to give you an indication of potential problems or sticky periods and what can we do to minimise the potential risk. That's what good cash flow management should look like.
Yeah. That's good. So we're about at the end of it, so I'll just do our little roundup. Is there anything else you would like to add in terms of cash flow and any advice, or I think we've kind of covered everything?
I think we've covered the main areas of cash, and I suppose, I have a number of kind of, Liam said I have sayings before actually, but what is it? Turnover's vanity, profit's sanity, cash is reality. And just always making sure that, you might have a fantastic turnover, great, but if that is not getting turned into cash and you're not generating cash, that is what's more likely to cause your business to fail or give you sleepless nights. So you want to try and get on top of it, get it managed, and then that's ultimately the foundations for growing a stronger, healthier, more successful business.
Yeah, just to summarise on that as well, not to get mixed up between the profit and cash, because it is completely different.
Yeah, profit is not cash. You could look at your account, see a profit, but be losing money.
Yeah.
And it's an uncomfortable position to be in that, but it is true. And if you get a standard set of year-end accounts from an accountant, they actually don't even mention cash, as a small, medium business. So you're relying on your accountant being proactive, you're relying on your software, or to help you with that, because if you're just having a once-a-year meeting with your accountant, cash might not even get mentioned.
Yeah. Oh no, it's been really good to have yours. Obviously today we've covered cash flow, why this is important, the common challenges involved with this, and how to improve your cash flow. So if anyone would like any further information, please feel free to contact our office.